Hi guys, welcome to today's awesome meeting. Welcome to today's awesome class. Welcome to today's meeting, right? So today we're going to be talking about something important. In fact, have you ever been in a situation where you are having disparities? What am I trying to talk about? Candlesticks telling you to buy, chart telling you that the market is ranging, trend is telling you a different thing, and indicators telling you to sell different thing. In that situation, what do you do? Right? What do you do? So that's the secret I'm about to share today, but don't tell anybody. But before we go ahead, if today is your first time joining this channel, you are never late, right? You are never late, right? So all you have to do is just to click on the subscribe button, share to your friends, those of them close to you, share them, especially for the daily analysis, because we release and we share daily analysis on this channel. So imagine where you are trading, and whenever you need analysis on certain things or you need information on certain things, you come to the channel. So it's very important, right? So it's nothing that is, it's something that is good for everyone, right? Remember, the channel is not for me, it's for everyone in the Forex community. Everyone in the Forex community. So let's go ahead. When you find those disparities in the market, what do you do? But before I go ahead telling you what you do, I would like us to note these things. Let's note these things down. Number one, chart patterns works very well, which we know, right? So it's no longer a that, or it's not in question whether the chart pattern works or it does not work. So chart pattern works, right? We all know that the chart pattern works, right? So candlestick, very good, right? So the candlestick, the importance of candlestick in the life of every trader can never be overemphasized. As a matter of fact, you can't trade profitably as a price action trader without talking about the candlestick, because candlestick is the hallmark of price action, right? Until you have revelation of candlestick, you can't be a good price action trader, right? So candlestick is no doubt that candlestick is good. So candlestick is not, yes, candlestick is very good also in the forex market. Following the trend or trading in accordance to the trend, that one is very important. We all know that following the trend is very good, right? So if the trend is going up, following the trend is good, right? So if the trend is going downward, joining the trend to ride it down is still good, right? So the importance of the trend in the market can never be overemphasized, right? It's very good in the market, right? So now indicators, not bad, right? If you have been following this channel, you find out that um, I'm not really I'm not really an indicator trader, right? Indicators are like equations solved from price action. Whenever the market is going by, or whenever there is a candlestick, or they engineer it in such a way that if the candlestick is saying or headed up, they will tell the market, or tells or the indicator, they program the indicator in such a way that if the candlestick give a particular confirmation for a buy, indicator will tell you to buy. If the candlestick or the chart gives a particular confirmation for a sell, they will tell you to sell. But all these things are built on personal strategies or individual strategies. So is it not better for you to know how to analyze and do the market or approach the market yourself instead of following indicators or following what is engineered? Because indicators are not 100%. I know 1001 indicators, but guess what? I do not use any one, even till tomorrow, but I'm profitable. Because what? I understand price action in the forex market. And you can see people follow the testimonies, they keep coming, right? But we have to still understand it in a better way, right? So chart pattern works, candlesticks very well, following the trend very well, indicator works, right? But whenever you see these things giving you a different approach in the market, what then do you do? Right? What then do you do when candlestick is telling you to sell? Price chart pattern is telling you that the market is in an uptrend. Trend is telling that the market is an uptrend, but indicator is telling you to sell. What then do you do? Do you avoid the market? Do you avoid the market? Are you going to avoid the market? Right? So whenever you experience things like that, it's not bad, right? It's common. It happens. In fact, if it's not happened, that means something is wrong. It happens, right? And the set it calls for confusion for those of them that do not understand price action, or those of them that have not been in the market for a long time. So it calls for confusion, right? So whenever you spot it, what do you do? Personally, uh, while I was trading those years, trading, when I spot things like that, I classify them based on priority. That is the only way for you to overcome that. When chart is telling you to buy, trend is telling you to buy, candlestick is telling you to sell, indicator is telling you to sell, you classify it based on priority. Which one comes first? Which one comes first? That is the only way for you to beat that confusion. Because if you don't beat it, it will still remain there. So how do we classify these four things? This candlestick, this chart, these indicators and trend, how do we classify them based on priority? Which one comes before the other one? Which of them comes before the other one, right? So this is a very wonderful secret, right? Don't tell anybody, but remember to share, right? So based on priority, when you are in a situation where price or chart is telling you to do a different thing, trend is telling you to do a different thing, candlestick is telling you to do a different thing, indicators telling you to do a different thing. Now, note this. Based on priority, in the Forex market, whether you're trading the currencies, whether you're trading the metals, whether you're trading the commodities, whether you're trading stocks, cryptocurrencies, indices, based on priority, the number one is the trend. As you can see here, the trend is the number one. Number two, after considering the trend, number two is the chart pattern. The chart pattern, that's the number two. Number three, the candlestick formation. The candlestick formation, that's the number three, based on priority. Then number four, the last, is the indicators. Indicator is the last. If you use indicators, indicator is the last. Don't go and be considering indicators over chart. No. So if you are in a situation, let's say the trend of the market is the market is an uptrend, and you are receiving a candlestick confirmation telling you to sell, do not sell. Because based on priority, which of them comes first? The trend. If you do this, profitability will be very, very easy. Just do this, especially you that have been having it difficult to it has been difficult for you to make money. You make money today, you blow the account, you blow your account. You that have been blowing the account, or you are also making profit. So if you are in a situation, trend is uptrend, but market is telling you to sell, follow the trend. Don't follow what the candlestick. That is why those your candlesticks get nullified. That is why those candlesticks get nullified, because you leave the most important thing. The trend comes before the candlestick, right? So since the market is in an uptrend, but the trend is telling you, the candlestick is telling you to sell, avoid the market until the market finishes its retracement, then give you another candlestick for a buy. That's when you now enter the market. Only follow a candlestick confirmation, only follow the direction of a candlestick. If a candlestick is telling you to buy, let it be that the trend of the market is in an uptrend. And if the candlestick is telling you to sell, let it be that the trend of the market is in a downtrend. I don't know if you are getting, right? So after the retracement, there must be a confirmation. Chart. After the trend, then the chart, right? After the trend, then the chart. You can't be seeing a double top in the market, a well-formed double top in the market, waiting for a retracement for a sell, and you are thinking of buying because you have a candlestick confirming for a buy. It's not gonna work. Double bottom is for a buy, double top is for a sell. Or you are seeing head and shoulder, which is for a sell. You are thinking of buying because candlestick says you buy. It's not gonna work. So based on priority, chart even comes before candlesticks. Trend number one, chart. So if you are in a situation, the chart pattern is telling you to sell, giving you a particular pattern, maybe double top, head and shoulder, or any pattern in the market, telling you to sell, and you go clicking, telling you to sell, and there is a candlestick confirmation confirming for a buy for you, do not buy. That is why those candlesticks, especially the ones you've been using previously, get nullified. Then after the chart pattern, you now talk about the candlestick. The candlestick is supposed to be the last man standing, but it's not the last man standing. The candlestick justifies everything. As a matter of fact, one does not work without the other one. In as much as the trend comes before candlestick, but if a market is in an uptrend, don't buy until the candlestick gives you confirmation. You can see how they work hand in hand. Yes, it's the third based on hierarchy, but you cannot trade even when chart pattern tells you to sell, even when trend tells you to sell. You cannot sell until you have candlestick confirmation. So candlestick is the hallmark of price action. You can see how important the candlestick is. They all work hand in hand. Before now considering indicators, indicator is the last. Indicator is the last. As a matter of fact, if trend has confirmed for you, chart has confirmed for you, candlestick has confirmed for you, indicator, whether you have any, you can buy or sell without any other confirmation from indicators. Provided the trend has confirmed, chart has confirmed, candlestick has confirmed, indicators, you can go in for buy or sell using you can now go in for your buy or sell without indicators. Indicators are now for further confirmation, but don't turn it around putting indicators first. If you put indicators first, the person will pay in a hard way, right? So trend first, chart second, candlestick third, indicators last. So are you enjoying this video? Remember to subscribe, share to your friends, share to those of them close to you in order for them to also benefit, right? So as a way of recap, we started with Forex market priorities, right? Forex market priorities. We said that the chart pattern works, which is very important. Candlesticks very good too. Following the trend very good. Indicators good, right? But based on priorities, classifying them, the trend comes first, chart second, candlestick third, indicator last, right? Trend comes first, chart second, candlestick third, indicators last. Do not mix any of them. These things are very, very important and very, very key in the Forex market. Are you enjoying this video? Thank you for joining us for today. Thank you for joining us today. So see you on our next video, right? Bye now.